Today I want to share with you a $250,000 waste tactic. How do you build business credit with poor personal credit? So here's an overview I want you to pay attention to. So the thing is that building business credit can take time. I mean, don't let anybody razzle dazzle you telling you can build business credit in 90 days or 120 days. No, it takes time. Probably around 1 year to 1.5 years. So think about 1 to 1.5 years. But the thing is that if you want to build business credit, no matter what your personal credit, if you have poor credit, fair credit, you first want to incorporate. Okay, it's not about, it doesn't matter if you are a solopreneur, if you are a one-person business, you got to have a business. Everything starts from there. Why? Because you want to actually separate your business affairs from your personal affairs. Once you are able to do that, it wouldn't matter anymore if you have poor personal credit. So if you have a FICO score that goes from 300 to 590 or 580 for that matter, it's important to establish a business. So we're talking about you going to your state authorities and trying to file for an LLC, a single member LLC, or a single member S corporation if they allow you to do so. So you have so if you are one person business, you can have the best option for you is to have a single member LLC. You want to have that. And everything starts from there. So you need to have from the state something called a certificate of good standing. So they actually know that you are actually, you're all good and you are registered everything. And you need to have your articles of organizations. Okay, if you're an LLC, that's another thing. So once you have that, what you want to do here is that you want to get your EIN. So you need to file with the IRS. So you got to get your EIN. And it's a 9-digit number, and it's kind of similar to your company's social security number. It's kind of cool because you'll be basically basing your business credit based on the EIN, but also you need to register with Dun & Bradstreet. So Dun & Bradstreet will give you something called a DUNS number. It's free though. I mean, it doesn't really it doesn't take that long. So getting your EIN takes about 15 minutes to 30 minutes. Your DUNS number will probably take you about a day, but it's really fast too. And trying to get a dedicated phone number, business phone number as well. If you can get also a business address, this is kind of cool. Don't actually link your residential address to your business address. By the way, boss, welcome back to the show. It's really a pleasure to have you here in today's conversation where we are really talking to you about how to build business credit with poor personal credit. The second thing I want you to do here is to scan your business credit reports for errors. So the thing here is that if you are, let's say you are a business, you haven't incorporated, you have been business for several years now. And so it's important to really pay attention to your paydebt. So what you want to do, you want to contact the Dun & Bradstreet to order your paydebt score reports. You want to do the same thing with Equifax and Experian. So those are the three things. I mean, there are other business credit report agencies. You have, but the thing is, those three are the top. So you want to contact each of them. The thing is that they will ask you to pay, but hey, listen, it will cost you about $30 to $50. This is worth it. It's worth it to actually order your business credit reports. And what you want to do is you want to really, really go granular here. You want to look at every line to make sure that you actually recognize the liabilities, that you recognize the transactions, and you also recognize the lenders. Okay, I mean, it can be a lender or it can be a vendor. So maybe you are a net 30 customer or net 45 customer or whatever. So you want to make sure that you recognize the amounts, the liabilities, and the transaction. I mean, the transactions as well as the lenders. Very important because those will determine your credit score, your business credit score, your paydebt score, your Intel score, and other scores. And financial data. So when we talk about, when you look at your business credit reports, please pay attention to financial data. So financial data, including your business's estimated sales, available credit, historical use of credit, payment history, credit inquiries, and collection accounts will actually play an important role when it comes to your business credit scores. Okay. And public records information such as tax liens, judgments, lawsuits, bankruptcies, or fraudulent activity related to your business also will play an important role on your business credit. So this is important. So your paydebt score should be around 80. If you want to have like something decent, 80 is actually the starting point here, okay? And so it's one of those things you want to, again, you want to contact all those three agencies, Dun& Bradstreet, Experian Business, and Equifax Business. You want to make sure that your data is accurate with them. By the way, boss, I want to quickly remind you of today's topic. I'm actually explaining to you how to build business credit with poor personal credit. The third thing I want you to do here is to establish trade lines. So number one, you want to incorporate and establish your business. Number two, you want to scan your business credit reports for errors. Number three, you want to establish trade lines. So when we talk about establishing trade lines, what are we talking about? We're speaking about business lines of credit. We're speaking about business credit cards. We're speaking about business loans. We're speaking about net 30 accounts, net 45, net 60 accounts. So it's one of those things. Now, the thing is, which one should you go after? It really depends on your business. It depends on your business fundamentals. Depends on your operational patterns. What do you need right now, boss? Talk to me about what your liquidity needs are. Do you need a business line of credit? Do you need working capital? If you need working capital, you might want to go with a working capital loan or a business line of credit. If you just need, let's say, a fixed amount that you can repay over a set amount of time, then go for a business term loan. Or do you need to have a net 30 accounts? Maybe you're buying inventory from a vendor and you just want to have some flexible repayment terms. So if that's the case, you want to look for a net 30 accounts, a net 45 accounts, or net 60 accounts. Everything depends upon your industry. It depends upon your cash inflows and cash outflows. It depends upon what kind of industry you're in, because if the practice in your industry is to have a net 30 accounts, then you want to go with that. If your practice in your industry is a net 45 account, go with that. If the practice in your industry is to pay on cash, to pay right away, then you want to look for that as well. Don't forget to also seek business credit cards. Yeah, because when we talk about establishing trade lines, we're speaking about business credit cards also. And you want to start with your existing bank. You want to start with your existing institution. That way you already have the relationship, and they don't have to check they're not checking you too much, because they already know you personally. They've seen your cash inflows and cash outflows. They've seen your liquidity patterns, so they know how much you're pulling every month anyway. So this is kind of cool. So it wouldn't matter if you have poor personal credit. The bank will still look at your poor personal credit though, but they will actually give you a pass, so to speak. So it's important to always have a relationship with a bank or a credit union for that matter, and actually start from there. So when you talk about having business loans, business credit cards, business lines of credit, you want to start with your existing financial institution. The next thing you want to do here, if you want to build business credit with poor personal credit, is to pay on time. You really want to pay on time. Even better, you want to pay early. And when we talk about paying on time, and sometimes when people talk about paying on time, people say, well, I've heard this several times over and over and over. Does it really matter? Yes, it does. It does. When it comes to building business credit, paying on time is an important criterion that will boost your payment score like crazy. If you really want to be like around, the thing is, when you pay on time, your payment score will be around 80. If you pay early, your payday score can go all the way to 95. Remember, payday score goes from what? 0 to 100, and the higher the better. So you want to be as close as possible to 100. Okay. So the thing is, in this economy, with banks actually filing for bankruptcy, with stuff happening here and there, a lot of lenders, a lot of vendors, they really pay attention to borrowers' repayment patterns, because they want to see whether they want to detect early signs of trouble. So if you are able to pay on time, this means that you have a rosy financial situation, and lenders love that. So you want to pay on time. And how do you do that? Well, you have several ways of doing it. You can automate everything. In other words, you actually you can actually have your bank accounts actually pay whatever loans or whatever lines of credit you have automatically every month, or even credit card payments automatically every month. Or you can actually insert this in your budget. So basically you say, okay, every month for our monthly budget for my business, we have like $1,000 in terms of business credit repayments. But either way, if you want to win in this game, you got to automate things, okay? And when we talk about paying early, we're not speaking about just credit cards. Vendors also. Let's say you have a net 30 accounts with vendor X. Even though they gave you a net 30, pay within 20 days, pay within 15 days. Okay, as long as you have the cash and you have no need for that cash in the following 15 days or 10 days, just pay early. This establishes a great relationship with the vendor, and really lends another layer of credibility to your account, to your business also, and this will help you a lot when it comes to building business credit with poor personal credit. The next thing you want to do here is to keep working on your personal credit. See, the whole thing is that we've been talking about how to build business credit with poor personal credit. Okay, that's understandable. But if you want to actually build business credit, there is a relationship, there's a correlation between your personal credit and your business credit, because the lender or the net 30 vendor will be paying attention to your personal credit to see whether you are financially responsible at the personal level. It doesn't matter if your business credit score is kind of high, but if they realize there is a delta, there is a gap between your business credit and your personal credit, then you have a problem. What I'm trying to say here is that let's say you have a credit score of 87, which is really good. You know, you have 87 or 90, and which is high, and your personal credit really hovers around 500, and it's been sitting there for the last 24 months. What do you think the lender's going to think? The lender's going to think, well, this person has a problem because he or she is not able to apply good habits, good financial habits that he or she is displaying on the business side into his or her personal life. And this is not good. So what you want to do is you want to work on your personal credit simultaneously. So when we talk about personal credit, you have to identify all the elements that are really keeping your FICO score low, right? Is it your payment history? Is it maybe collections on your account? Is it that you have a lack of diversity in terms of your payments? Is it because you have a high DTI? Is it because you have a high CUR, a credit utilization ratio? So those are elements you need to pay attention to see what really is keeping your FICO score low. And but you have to work on your FICO scores. There is a strong relationship, I want to insist on that, between business credit and personal credit, especially if you are a new business or you are trying to build business credit through your bank. Let's say the bank or credit union, you're trying to get a business credit card, or you're trying to get a business line of credit, or a business loan for that matter. You're trying to get it through your bank or credit union. They will check both credit reports to see what's really happening there. Okay, so it's important for you to actually beef up those two. By the way, boss, I want to quickly remind you of today's topic. I'm explaining to you how to build business credit with poor personal credit. We're speaking about a maximum power play of $250,000. If you build your business credit the proper way, you can borrow up to $250,000. Let me give you a few pro tips here. It's important to understand that if you are trying to really increase your business credit real fast, you have to pay attention to what's happening in your sector. So basically, you're probably in an economic sector right now. Your business is probably what's really happening here is that if your sector is having a boom, this will impact your business credit score. It's kind of funny, but the banks and credit unions, they analyze a lot before giving you credit. They analyze not only your personal credit, your business credit, but they also pay attention to what's really happening in your sector. And banks and credit unions, for that matter, they actually assign credit risks to each economic sector. So pay attention to what's happening, okay? So if you know that your sector is really booming, when you apply for a business line of credit or business loan, you want to mention that. You want to say, hey, listen, I'm doing well and my sector is doing well, because remember that the lender is worried about repayment, right? So they'll give you like $100,000, or they'll give you a $250,000, but they're really worried about you paying them back. So it's important to really reassure the lenders that, hey, listen, you will have the proper liquidity to repay them. And one thing I want to say also, so your sector is important. Your business financials are important. So we're speaking about your 4 financial statements. We are speaking about your business balance sheets, your business's statement of cash flows, your business's income statement, and your business's equity statement. So those four elements are really important. And also another set of data that's also pivotal is what we call your operational ratios, your operational metrics. Okay, things like your outstanding balances, your company's payment history, your credit utilization ratio, your trade experiences, your years in business, and your business size. Obviously, if you're a small business with 1 year in operational history, you're not going to have the same sort of quote unquote respect that if you were a small business with 10 years of business, right? It's all about longevity plays an important role also, especially when you know the how do I call it, the success rate of startups in this economy. I mean, startups actually actually unfold after 3 years maximum. So if you're able to survive past the third year, this is really great when it comes to risk mitigation, and banks and credit unions love that. So pay attention a lot to so those are elements you want to insist on when you apply. Let me give you a winner strategy here. If you're trying to really have a power play of $250,000 business credit, you're trying to build business credit with poor personal credit, it's important to understand that the thing is, you want to actually look at your personal credit score, but also your business credit score simultaneously. And the cool thing is that like if you take Equifax or Experian, for example, they are both personal credit report agencies and also business credit reporting agencies. So when you contact them, make sure that you actually talk simultaneously about both issues. Do not confuse them. Do not mix them up. But when you just make sure that for instance, when you call, if you call Equifax, make sure that you tell the rep that you are here to fix your personal credit scores, your personal credit reports, but also your business credit reports. It's not really efficient for you to file 2 types of reports. You can do it simultaneously. Now, Dun & Bradstreet is the only I think agency that doesn't do things on the personal side. So you're going to have to contact TransUnion automatically. So what I want to say here is that you have to contact 4 credit report agencies: TransUnion, Equifax, both business and personal, Experian, both business and personal, and Dun & Bradstreet, business only. So what you want to do is that if they're asking whatever they ask you, now this might take you about three months maximum, but because you have the back and forth, you have the back, sometimes they ask you to provide financial documents. You need to upload those documents. They might ask you to provide your tax returns to actually prove your revenue or your your income. So just make sure that you are able to go through the process. Some people actually will hire third parties to handle this for them. If you don't have time, you can do it. But otherwise, it's just this process takes time. That's all. Nothing complicated. It just takes time. And also, don't forget to add trade references. So when you actually go through your business credit reports, make sure that all your net 30 vendors that you have, all your net 45 vendors, they are in there. Okay, because you really want to get credit for your good credit habits. Okay, so this is important. And another thing I want to say here is that when we talk about when we talk about having a winning strategy in terms of building business credit, make sure that you pay attention to consistency. It's not about having a good payment history for 6 months. It's about having a good payment history for 6 years. It's about consistency. And one thing I also want to say here is that you want to practice smart spending with you want to actually diversify your credit products. So you want to have you want to have a business credit card, you want to have a business line of credit, you want to have a business loan, you want to have a net 30 account. So you want to have a diversity of business credit products. That way, lenders will see that you are responsible no matter what the credit products you have, right? At a minimum, you want to have a business term credit product, such as a loan or something else. But you also want to have a revolving line of credit. So this could be a business credit card or a business line of credit. No matter what, you need to diversify. And one thing I also need to say here is that you need to keep a low credit utilization ratio. That way the lender will say, okay, this person is responsible in terms of managing their cash inflows and cash outflows. Remember, your DTI will actually predict your ability to repay your financial obligations. So that's why lenders pay attention a lot. They really track your CUR and your DTI like crazy. And one last thing I want to say here is that maybe it could be a great opportunity for you to consolidate your existing debts, either at the personal level or at the business level, okay. So if you have business debts and you think that you have like 3 or 4 with multiple lenders and the APR is not really that decent, it could be a great opportunity to consolidate, to think about consolidating your business debt. That way you are dealing with only one lender and potentially have a low APR too. And the same process can apply to your personal loans as well. Thank you so much for your attention. I really appreciate it. Let me quickly recap here. In today's conversation, I was just talking to you about how to build business credit with poor personal credit. So I gave you the overview, I gave you the pro tips, and I gave you the winner strategy. Thank you. God bless you. I'll see you next time. But until then, remember, stay marvelous.